My name is Jörg. I'm a foreign associate at So Sato. I'm specializing in blockchain, crypto, and finance. And I've been here for 1.5 years at So Sato. So Sato is a boutique law firm specializing in crypto and blockchain. 80% of our clients are actually blockchain companies. We do anything from blockchain gaming to crypto derivatives and exchanges. And yeah, as Norbert mentioned, I'm going to talk a bit about the key building blocks of DeFi and provide some regulatory considerations concerning the key building blocks. So I don't know how closely you have followed DeFi Summit this year. For those of you who haven't, the charts might provide some good idea how explosive the growth of DeFi has been this summer. The growth of DeFi is usually measured in TVL, the total volume locked. And as you can see in the first chart on this slide, we had roughly 1 billion worth of crypto assets locked into DeFi protocols by the beginning of the year. And then suddenly, starting from June, July onwards, there was an explosion. So by October 20, we had 11.5 billion crypto assets locked into DeFi protocols. I put the other charts in this presentation because the TVL is sometimes criticized as being a bit biased. As you can see, the TVL is measured in USD. And if you use the USD amount, you will see that the ETH price at the same time almost doubled, right? So this has an impact on the TVL. But on the right-hand side, you can easily see that the amount of ETH locked into DeFi protocols increased at the same time. So I think it's fair to say that there has been explosive growth in DeFi space. And yeah, let's have a closer look at what DeFi is and what the key building blocks are. So DeFi is decentralized, or stands for decentralized finance. It's basically the provision of financial services via blockchain protocols without financial intermediaries. And the key building blocks are AMMs, automatic market makers. We talk about them in more detail later. Examples are Bancorp, Balancer, Curve, and Uniswap. And there's an interesting fact about Uniswap. So in summer this year, I think it was in September, the monthly trading volume of Uniswap exceeded the trading volume on Coinbase. So this gives you an idea of the growth of DeFi as well. And yeah, then we have DEXES, decentralized exchanges such as DYDX, Serum, IDEX. We have lending protocols, Aave, Compound, and Preem. We have derivatives platforms such as Synthetics, DYDX, aggregators such as 1inch. More recently, also MetaMask joined the party. So they're providing aggregation services for the Firefox extension so far. And then we have Kyber and Matcha. And we have ROBO-ADVISORS such as Yearn Finance and Harvest.finance. All right, so I would say we start with the DEXES, decentralized exchanges. I don't know whom of you are trading on the Japanese market, but if you're trading on the Japanese market, you're probably using a centralized exchange. Oh, sorry, yeah, a centralized exchange. And a centralized exchange is basically an exchange which is custodial. So in order to trade on this exchange, you have to transfer your funds to the exchange. And the exchange will keep the funds for you and provide you an order book via which you can trade with other participants on the market. And if you take a look at the definition of crypto assets, exchange services in Japan, you will see that this kind of service is regulated. So the definition of crypto asset exchange services in Japan is in Section 2 of the Payment Service Act. And you will see in Item 1, it's covering the exchange with another crypto asset, intermediary services for an act concerning the exchange with another crypto asset, and then the management of crypto assets for others. And then in the second step, you have to determine whether a registration is required. And as you can see here, it says no person may engage in the crypto asset exchange service unless the person is registered with the Prime Minister. So basically what you have to do is you take a two-step approach. You determine in the first step whether the activities are regulated by the Payment Service Act. And in the second step, you take a look at the person who's providing the services, and this person must register with the Prime Minister, the FSA in this case, or not. So what you can see from here is that the Payment Service Act is not regulating technology, meaning if there's no person to regulate, there's a high chance that the Payment Service Act does not apply despite providing regulated services. So just keep this in your mind. So exchange of crypto assets, intermediary services for the exchange and the management of crypto assets for others is regulated in Japan in general. And there might be some exceptions if the project is sufficiently decentralized. So let's jump back to the decentralized exchanges. So decentralized exchanges are non-custodial, meaning the user keeps control over his funds. And there are basically two kinds of decentralized exchanges. So you have order book types and you have non-order book types. So the non-order book types are AMMs, automatic market makers. We're having a look at them later. So let's take a look at the order book types of decentralized exchanges for now. So you have off-chain decentralized exchanges. They're using a hybrid approach where the order book is off-chain, but this fund settlement occurs on-chain. And this one is clearly regulated as a crypto asset exchange service. And there's even an entity behind the DEX because someone has to provide the order book, which is regulated and which must register with the FSA in Japan. Then you have on-chain order book exchanges. And here it's really important to take a closer look at the smart contract controlling the order book. So if you have a smart contract with far-reaching admin rights, where the team can still control the order book, the team might be regulated by the Payment Service Act. If the smart contract is fully decentralized, meaning there are no admin rights whatsoever, there's a chance that this service is unregulated because there's no person you can regulate under the Payment Service Act. So again, the critical features are off-chain order book, on-chain order book, and custodial. Because there's a person you can regulate, just very quick. So I think we can jump this one. So let's take a look at AMMs now. AMMs are automatic market makers. They are also a kind of decentralized exchange. But the difference between DEXES and AMMs is that there's no order book. AMMs do not have an order book. So if you take a look at the user on the right-hand side, you can see that the user can interact with the protocol. So the user can exchange token A for token B if he pays a fee to the protocol. And this one is clearly a crypto exchange in Japan. We will have a look at the regulations later. Let's focus on the mechanics for now. And then on the left-hand side, you need someone who's providing the liquidity to the AMM pool. So you need someone who's providing A tokens and B tokens to the pool with which the users can interact. So if the liquidity provider on the left-hand side provides token A and token B to the AMM pool, he will receive a liquidity provider token representing his share in the pool. And this share also authorizes him to participate in the transaction fees which are charged to the user. And having a look at the liquidity token again, or the LP token, this LP token can be staked with the protocol, and the protocol will then issue a governance token as an incentive. So usually it's used as a mechanism to bootstrap a protocol, to attract liquidity on these protocols, and to, well, create network effects. So I hope this explains a bit how AMMs work. So let's have a look at the regulations. The critical features here are basically, let's start with the right-hand side. The user again interacting with the AMM protocol. There's a clear crypto asset exchange provided by the protocol, which is usually covered by the Payment Service Act. Then on the left-hand side, you have the liquidity provider providing token A and token B to the AMM pool and receives another token in return. So this one could be seen as an investment in the AMM pool, and in return, the LP token might be seen as a security, since the liquidity provider is able to participate in the transaction fees charged to the user. This really depends on the design. So if the LP token is not seen as a security, then there might be an actual exchange between token A and the LP token. And then you might also have some custody elements on the AMM side. If you take a look at the AMM protocol at the bottom, you will see that the governance tokens, the issuance of the governance token might be seen a crypto asset exchange service under the Payment Services Act. So actually in Japan, ICOs are covered by the Payment Services Act as an exchange service. The difference between ICOs and this kind of liquidity mining is, however, that there's no consideration paid, there's no funds provided by the liquidity provider to the protocol on a permanent basis. So the liquidity provider is able to unstake his token anytime. So the governance token is more or less, or the issuance of the governance token is more or less comparable to an airdrop, which is not regulated in Japan. So, and you have to bear in mind, we're just taking a look at the first step, right? So we're trying to understand whether the services are regulated in Japan. In the second step, we have to take a look again whether there's a person who might be subject to these regulations. Because again, financial and capital markets regulations always regulate conduct and the conduct of persons. So the target is an actor. If the protocol is, however, fully decentralized, there's basically no one to regulate, and the regulations do not apply. Okay, I think we move onwards. So the next slide is on the pricing mechanism. I leave this out. You can have a closer look at the pricing mechanism later. Let's move on to lending. So lending protocols, yield farming, there are many memes in the crypto space, so this is one of them, famous one. And let's have a look at the lending protocols. So if you have a look at the lending protocols, what you will see is that they function very similar to AMMs. So on the left-hand side, you have someone providing some kind of liquidity to the protocol, and who's receiving another token representing his share in the protocol or in the pool. And based on his share, he will participate in the interest charged to the borrower, and he might get an incentive. So the basic interest of the lender is generating interest, earning governance tokens, which he's able to sell on the market later. And what you can see here, and this one is very important for lending protocols, you can only become a borrower if you have been a lender. This is a bit funny because you can only use the protocol on the borrower's side if you have provided liquidity to the market, and if you have received an LP token, which is then be used as a collateral. Well, Compound subsidized the borrowing of on the Compound protocol at some point. So even the borrowers received comp tokens for using the Compound protocol. And so if I'm not mistaken, there have been times when the borrower made money, borrowing money from or funds from the protocol, just because the incentive, the comp token, was very expensive at this point of time. Let's take a look at the regulations again. The regulations are very similar. So you might want to ask yourself, is the first one the provision of crypto assets a lending service? Or is it lending? Does the lender provide, or does the lender lend the tokens to the protocol? If this is the case, custody regulations does not apply. There's no exchange of funds. Securities laws do not apply. But if he provides liquidity to the protocol and receives the LP token, which might be considered a security on the Japanese regulations, then the LP token is regulated itself, and the issuer, and the protocol might be subject to regulations. On the right-hand side, the borrowing of, or the provision of collateral and the withdrawal of funds might be seen as an exchange. It might be seen as an unregulated borrowing activity. And then the issuance of incentive tokens is very similar to the governance tokens provided by AMM protocols. This one might be seen as an exchange of crypto assets again, but we think it's more comparable to an airdrop, so regulations do not apply to the incentives tokens here. Okay, let's have a look at the next players in the market. We have the aggregators. Aggregators allow users to connect to various AMMs or lending platforms, and the aggregators allow the users of the aggregators to get the maximum yield or to get the best exchange rates on the exchanges. So this one might be seen as an intermediary service for the exchange. Again, in case of lending, it's probably unregulated, but you have to take a closer look at the protocol again. And again, if this protocol is sufficiently decentralized, there's no one to regulate. So despite providing regulated services, there's no one who could be subject to the registration requirements in Japan. And then this brings us to my favorite DeFi parts. It's the robo-advisors. They're basically using all the blocks we've been talking about, and they try to automate the yield farming. They try to generate the maximum yield for you by automating certain procedures in this in the DeFi space. So Yearn Finance has been one of the first protocols doing this. And I would say we try to have a quick look at the Yearn YLP vault. The users here in the middle, I'm not sure whether you can see it. In order to use this pool, you had to provide liquidity to the Curve protocol, which is an AMM. You would receive an LP token in return. The LP token would then be, well, deposited with Yearn Finance in the vault. And what Yearn Finance does for you, and this one is fully automated, it stakes the token in the Curve protocol. It receives CRV token, which are the incentives and on the Curve protocol, and sells these CRV tokens on Uniswap for you. And the yield Yearn Finance generates by selling these tokens on Uniswap are reinvested into the Curve protocol on your behalf. So there's a compound interest, which makes it very attractive to users to use this kind of service. I think the strategy has changed a bit, so this chart might not be up to date anymore. The strategy has changed because the yield was too low. I think it was somewhere around 5%. They started with 80% per year. And now the new strategies generates, I think, 10% for now, based on the last week's revenues. So again, here you might want to have a look at the Yearn Finance protocol, which is pooling the crypto assets for you. This might be an exchange service. Then you have an intermediary service for the exchange of crypto assets, which might be regulated again. Investment advice for crypto assets in Japan is not regulated, so this one is not problematic. But again, the exchange services for crypto assets might be subject to regulations in Japan again. For Yearn, I would say that Yearn is sufficiently decentralized. So again, there's no person you can regulate. On the second step, the FSA does not require regulation to register with the FSA, because there's simply no one who could register on behalf of Yearn. And yeah, this brings me to my last point. So we're having a look at DeFi derivative platforms. We are in a different act now. We have to take a look at the Financial Instrument and Exchange Act. So if you provide or if you engage in financial instrument business, in particular over-the-counter transactions for derivatives, you have to register with the FSA. Again, we need a person. Same for financial and capital markets regulation in general. And then, yeah, if you're sufficiently decentralized, registration requirements might not apply to you. This one, I think we can jump. So let's just have a quick look at the derivative platforms. So they operate very similar to DEXES. So you usually have an off-chain order book and on-chain settlement, also used for the deposit of the margins. And here the regulations are different. So the top might be considered a financial instrument business under the Financial Instrument Exchange Act. This is very likely if the order book is off-chain, because there's someone you can regulate then. And then below on-chain concerning the margin, There might be a custody service for crypto assets, which is regulated. Again, if you sufficiently decentralize this one, regulations might not apply. And for the makers providing liquidity on the market, regulations apply if this one is done on a business base. So yeah, I think the topic is quite overwhelming. Much has happened in DeFi space. Regulations are not easy to understand, and much depends on a case-by-case basis. But what I think is very important to take away from this one is a basic understanding of how DeFi works. Concerning the regulations, it's important to note that you as an investor in Japan, you're not regulated, so you can basically engage with DeFi protocols if you want. And if there's someone who is regulated, then this must be a person providing crypto asset exchange services or financial instrument business, or engaged in the financial instrument business. And if there's no one, regulations do not apply. So for anyone who's in the DeFi space, there are basically three ways to move forward. So either you provide regulated services and you comply with regulation. Second, you try to structure your product in a way that it is not subject to regulation, or you try to sufficiently decentralize the project in order not to be subject to registration requirements in Japan. And I think these are the 3 points you should take away from this presentation. I hope it helped a bit. I know it's a lot, so if you have any questions afterwards, please feel free to contact us.